Hello, this is Randy Smith. I wanted to take just a couple of minutes and talk about the accounting flow, the debits and the credits that transfer from Vicinity into Microsoft Dynamics. I'm going to do so today via the eyes of Great Plains, but it's the same whether it's Solomon or NAV. Before we get started, I just want to talk about the T account flow associated with actual costing. Everybody's environment is a little bit different, but generally speaking, this is how things operate. First off, if you look down the T accounts, we'll have one transaction on the first row, another transaction on the next row, and another transaction on the third row. So the first transaction that we're talking about for 50 is actually recording the usage of raw materials into a batch. So the journal entry that's happening when we do that is we'll be crediting the raw material account and debiting the production clearing account. Now the raw material account is coming from Microsoft Dynamics. It's the GL account, it's the asset account associated with that raw material. In GP terms, that's going to be the inventory control account associated with that item, and you get the same similar type of thing for Solomon and NAV. The contra account on this transaction is the production clearing account. That is actually defined by Vicinity on facility setup. So each facility has got a production clearing account. It can share production clearing accounts with other facilities if you want. You're going to find that that balance should be a zero balance at the end of a batch. So what we're doing is we're debiting this account for raw material usage, in this case for $50. Now the 50 comes from the value of the inventory that posted in Dynamics inventory. So if I had a unit of 1 pound, and it was $50 a pound, that's where this is coming from. If you're on FIFO, you may have different cost layers that you're going through. So just know that the cost that we're picking up is coming directly from the posted value from Microsoft Dynamics inventory when the inventory transaction posts. So that's the raw material transaction that happens from a T account perspective. The other side of this is the application of additional costs. I'm calling that labor right now, but it could really be any cost. It could be labor, overhead, depreciation, electricity, whatever, and I'll go through that in a few minutes. But what we're doing here is we're crediting the labor applied and debiting the production clearing. This labor applied, in my opinion, should not be set as the actual labor expense, but rather a contra account, another expense account very close to the actual labor account. I'd set up a different GL account so that on a financial statement you could net those two accounts together. You will find that it should net close to what you're actually paying for labor if you're fully absorbing your labor. If I skip for a second, I'll come back to the finished good for a second. And this transaction is really one-sided. There needs to be a cash or an accounts payable here. But this is where you're booking the actual labor expense. So through payroll or through a check via 1099 or whatever, this is the debit side. Of course, the credit would be accounts payable or cash or whatever. So you'll see that these two accounts will net against each other and any remaining balances over or under applied. So that's the additional cost that we have going on. You're going to find that you can set up as many additional cost IDs as you want to, and they can have different GL accounts associated with them. Finally, under actual costing, which is the scenario I'm talking about right now, Vicinity will then, when we put the finished good on hand, will add up all the costs that we see so far for the batch at the time of posting of the finished good and calculate the finished good cost. In this case, it's $60. So whether I'm putting one item or two items or 10 items doesn't really matter. It's coming up with $60 and applying that to the finished goods as we put them on hand in Dynamics. The T account associated with that is a debit to the finished good control account and a credit to the production clearing account. And just like we talked about in raw materials, the finished good account or the balance sheet account is associated with the inventory item in Microsoft Dynamics. And again, the production clearing account is picked up from the facility. So this is the T account flow that you're going to find for accounting.